Merci beaucoup et bienvenue à tous. C'est un grand plaisir d'être ici ce matin pour faciliter ce panneau. Good morning. Thank you, everyone. It's a privilege to be here this morning. I definitely don't look like I do in that picture as a serious banker. I'm trying to do my best to be fintech chic this morning. This is a really important topic in the fintech space, the rise of vertical solutions. And I'm very, very fortunate to be joined by a really fantastic panel this morning. I'd like to start by asking my panelists to introduce themselves and talk a little bit about their tie to vertical fintech and their contributions to the space. Let me start on the far right-hand side of the panel with Steph.
Hi, everybody. Steph Choo. I'm a partner at Portage. We're a fintech-focused venture platform. We've got two strategies, an early-stage strategy and a later-stage growth strategy, all fintech all the time. I spend most of my time thinking about payments. We've got a number of different vertical and horizontal payments companies in our portfolio, which is the topic of today's panel.
Hello, everyone. My name is JD, president at Lightspeed. For those of you that are not familiar with Lightspeed, we're a publicly traded company on the TSX and New York Stock Exchange, headquartered in Montreal. But we have footprint across North America, Europe, and APAC. About 170,000 customers today are using our solutions. We're known for our software solutions, deeply integrated into specific verticals, which we'll talk about later. But we've also started to offer financial services to our customers. To give you a sense of scale, we're getting close to a run rate of about $1 billion in revenue, and we've actually crossed over that more than half of our revenue is actually powered by payments and financial services. And as far as just a split, high level, 60% of our business is in North America, 40% in the rest of the world. We're 55% in retail and retail verticals, 45% in hospitality, like Jordan on my right.
Tough to go after JD there when you hear about Lightspeed scale. My name is Jordan Huck. I'm the CEO of Notch. We're a Series A fintech vertical SaaS startup. So we built a payments platform specific to wholesale food service. And so if you think about the wholesale food service supply chain, you've got restaurants that procure and pay to a distribution layer. So here in Montreal and Toronto, all those trucks clogging up all the streets is the distribution layer, right? So they're warehousing and distributing raw ingredients, and they buy from producers, right? And so the payments in that supply chain and all of the work around paying and collecting in that supply chain is completely offline. And so we have built a payments platform that allows restaurants to automate accounts payable to distributors. Distributors can automate accounts receivable. And what we really like is they also can pay their producers, right? They can use both products. And so as it relates to vertical SaaS, we just exist in this vertical and understand a lot of really unique needs, both financial services and in software, that help us create a really nice moat.
Hi, I'm Kathryn, Petralia, co-founder of Keep. We embed consumer and enterprise fintech into payroll and compensation to help employers attract and retain talent. We're a seed stage company, so I can't tell you a lot about our performance because we're just getting started. My last company was called Cabbage, which we sold to American Express in 2020, and it was SMB fintech, bringing all types of financial services products to small businesses. We had a big partnership with Scotiabank many years ago.
Perfect. Thanks, Kathryn. So let's start with kind of the basics, the 101, if you will. Steph, could you explain a little bit, like, what is vertical fintech, and how does that differ versus horizontal fintech? Could you kind of give a bit of a definition of what that means?
Yeah, I can take a crack at it. So we think about vertical fintech as really being, or the difference between vertical and horizontal fintech as really where the starting point is, because honestly, a lot of it is converging over time. But vertical fintech, we really think about as vertical software. So the idea is you've built usually a workflow solution, sometimes an operating system. It's a piece of software that you can charge a SaaS fee for typically that serves a very specific segment or niche. Sometimes it's an industry segment like freight. Sometimes it's a very specific target segment like field services operators. And you're building some form of workflow for them, which then you can embed different kinds of financial services products as a part of the revenue stream. So the canonical example of this in Canada and in globally would be Shopify. We've got a couple of examples. Notch like on this stage, I would say, and then obviously Lightspeed of vertical fintech. Then you look at horizontal fintech. Again, the starting point of horizontal fintech is more like a payment processor or a lending product. So the idea is you start with the financial product. Sometimes you can have a target segment, but it's not really built as a software targeting a specific segment. It's really a financial product that that you can embed into other products. The challenge there is always distribution, which is why we've now seen a evolution of horizontal fintech, both by industry and also an evolution from a B2B or a B2SMB model to almost an embedded channel distribution type model. And so over time, so again, Stripe is probably the canonical example of the horizontal fintech. We have a couple in our portfolio of other processors like Tally that serve differing markets, but really start in the financial product world. But again, I think over time, we're starting to see real convergence of vertical and horizontal, but as a starting point, that's a framework.
It's super helpful, and I know JD, like Lightspeed has done, had a tremendous amount of success in terms of building out some of these vertical solutions. Could you kind of expand a little bit on the way Steph was describing in terms of how Lightspeed has approached vertical solutions?
Yeah, for sure. I'll walk through the Lightspeed journey quickly. So, company was founded in 2005, and I would say up until 2019, we were very focused on providing amazing software solutions that power retailers and restaurants. In retail specifically, we go deep into 12 verticals as per how we categorize them on the Lightspeed front, with one unique commonality, which is they all have deep inventory management needs. So our software solution goes really deep into bike, pet, electronics, jewelry, apparel, footwear, golf, and so on. From 2005 to 2019, we really scale that business, focusing on providing amazing software solutions to those verticals. Similarly, on the hospitality side, as Jordan expanded earlier, we're a great fit for table service restaurants. We're a great fit for multi-location restaurant groups. Here in Montreal, for the Montrealers, Joe Beef uses our solution. Specialized on the retail side, if you're a biker or a cyclist, uses our solution. On the golf course side, Kapalua Golf, if you've been to Hawaii before, uses our solution. So we've really scaled the business with software in mind first and foremost. And over time, we realized we were powering through our platform a lot of transactions. To give you an idea of scale, as of today, we have about 100 billion in annual volume that is processed through the Lightspeed platform. And so in 2019, we decided when we went public, to expand and embed, as Steph highlighted, financial services to our offering. Prior to that, our customers would be using, on the payment side, the MODERATORs of this world, the Elevons of this world, the Chases of this world in more of a standalone fashion. And we decided to build our own white-labeled Lightspeed payment solution, leveraging a horizontal tech company like Stripe, like Adyen, so that we have a payback model and provide that additional service to our customers. Today, about 22% of that 100 billion in GTV that I mentioned before is now monetized through the Lightspeed payments platform. And we're only getting started. There's a lot more that we can do around financial services. We launched our capital product. We're now talking about payroll and all sorts of things to continue to go deeper into the vertical needs of our customers and ultimately continue to be sort of that one-stop shop that powers all of their workflows.
Thanks, JD. And I think you hit on two really key elements, and I think you teed up the next question perfectly, which is the fact that these vertical solutions allow fintechs to more surgically solve customer problems and really get to the core of what the customer need is. You teed it up perfectly because you mentioned both payroll and hospitality. So I'm going to go to Jordan first and then Kathryn in terms of, can you talk a little bit about how being a vertical fintech allows you to be just that much more nuanced, that much closer to the customer and their needs?
Yeah, I mean, I think I can share an example. Again, hard to go after JD to put it in perspective. We've got about 100 million flowing through the product. We uniquely understand the payment needs of our wholesalers, right? And so, we've probably had 1,000 discovery meetings over the last 12 months, right? And we understand for these wholesalers the way payments are coming in, right? And 100% of them are coming in as push payments. And we know before we even go into the meeting that, 20% is going to be credit card, 60% are EFT or ACH payments that are being pushed to them, right? So that insight in that vertical drives everything for us, right? It drives roadmap for software. So we want to create a situation in which all of that money, and I'm sorry for my banking partners, I want that to come off Scotia rails, right? And I want it to come on to Notch rails. So I want to build software for the people that are pushing payments. So the people that are pushing payments, I want that to come onto our rails. And then we know as we go out and negotiate for a horizontal, which we're doing right now, for a horizontal payment processor, that we've got to have really great rates for EFT and ACH, right? That's a key part of our value proposition, to bring that, to bring that volume onto our rails. And so, I think that the concept is, when you're deeply embedded in a vertical, we understand the software needs, and you can't just market. Lightspeed's done a world-class job. You can't just market that you're in that vertical. You have to truly build into the workflow. I talk about that at our board meetings a lot. And when you build into that workflow, you're then in a privileged position to be able to know what financial services to be able to provide. And I think just this explosion, I'm sure we're going to talk about it, of, point solutions for insurance. Well, if I know a restaurant location is opening up a new location, it might be an opportune time to provide property insurance, right? And so when you're uniquely and deeply embedded, all those opportunities will come up. It's my job as the CEO not to get too far ahead at our stage. Steph mentioned it usually starts with payment processing, and then companies like Shopify expand into lending and all these other types of things.
No, that's a good insight. That deeply embedded nature and the insights you get from the data allows you to self-perpetuating wheel. You get closer and closer to the customer, makes your products better and better, right? Gets you closer and closer, and it's a great process. Kathryn, yourself?
At Cabbage, we had about 600 employees before we sold the company, and we spent a ton of time trying to figure out how to more deeply engage with them. We were focused on getting all of the Glassdoor awards and the best places to work and amazing benefits and bring your dog to work. But at the end of the day, the relationship that employers have with employees is centered around compensation. That is how we negotiate where we're willing to go work and what we're willing to do. Yet every employee generally makes their employer a 2-week loan. We have this crazy situation where you work for a while and then you get paid, and then you work for a while and then you get paid. And the beneficiaries of these are not even the employers; it's really the banks that are holding the money, and the payroll companies that are holding the money and eventually giving it to the employees. But compensation and payroll is actually not a relationship that does a lot other than give the employee money. So what we thought about was, how could you create a deeper relationship with your employee, give them more flexibility over how they get paid. And we're building what we call real-time pay so that employees can, at their employer's discretion, of course, modify how they get paid. And for us, what we're excited about is embedding FinTech into that payroll relationship, because most payroll companies don't have any relationship with employees. They just give them money. But through the data, which you were talking about, that you can collect, not just through payroll, but through other data sources that employees can give you access to, then you have the ability to offer them other financial products and help them make decisions at the point of pay about their financial lives. 90% of all the jobs in the world are service jobs. These are hourly workers, these are shift workers, and they don't have access to the kind of financial planning tools that those of us in this room probably take for granted. So the idea of being able to do that what I think of as the highest yield and lowest cost routing of money for consumers, for employees, is where we're going. And all of that involves embedding what we're building into payroll, not just ours, but others.
No, and you and I have had some discussions ahead of this. It's such an exciting, and I'm personally passionate about that space, and could talk the entire panel about it. I'm sure it'll come up in Q&A. There is a trade-off, right, in terms of being a vertical fintech versus a horizontal fintech, and there's like a scale question versus specialization. JD, Lightspeed's in a unique position where you've got some horizontal assets, you've also got some vertical assets. How do you think about kind of the trade-offs of scalability versus specialization? Is there a sweet spot, and how do you navigate that?
Yeah, it's a constant battle. I mean, our challenge at Lightspeed is that not only do we go deep into retail and hospitality, we're also scattered all over the world, right? So as I said before, we operate not only in North America, but also in Europe and in APAC. And if you think about financial services in that context, each country where we operate is a slightly different twist. On the payments front, as you know, as we all know, the tender methods are different per country. We're in Belgium, Switzerland, France, Germany, UK, you name it. Like, they all have a different approach to the industry. And so that's a challenge that we're constantly dealing with. We do see common ground between retail and hospitality, and we do see a lot of trends converging, but having to specialize in these verticals and having to specialize into these countries, there are unique challenges that we're facing. In hospitality, there's an additional layer which we see here in Quebec as an example. We also see often in Europe, which is the local legislation requires restaurants to integrate with some sort of fiscal module so that the government can keep track of the revenue. So that adds, again, another layer of complexity as you're specializing into these industries and you're specializing into these, these regions and these countries.
Yeah. Jordan, you mentioned that one of the challenges of being CEO is that how to manage the roadmap and the backlog and how to prioritize. Can you talk a little bit about, in that same vein, specialization versus scaling? Like, how do you think about it?
Yeah, certainly from a product perspective, and then I really think a lot about that trade-off on the distribution side, so I'll talk about that in a minute. But on the product side, I think it brings focus, to be frank. And you've seen the unbundling of horizontal markets in marketplaces, in B2B SaaS. Then you've seen it in financial services, marketplaces like eBay, and now there's GOAT, right? Just to focus on sneaker, that specific vertical. So for us, it allows us to be very, very focused. I'll give you an example. So, on our payer product, if you're a horizontal, so it'd be very standard for a horizontal, I'll leave them unnamed, but, horizontal AP automation player, you need to digitize these invoices, right? You got stacks of paper invoices, you got to digitize them. And so they would offer a sync into all the largest accounting systems in the world. Well, what we figured out very specific to hospitality, and we're actually going to help our friends at Lightspeed, just signed a deal with them. The personas in hospitality want to sync that invoice in two places. They want to sync it into Lightspeed K-Series, right, to give them their COGS, their cost of goods sold. And they want to sync it into the general ledger so the accountant can pay it. That's a very, very niche use case. There's like us and maybe one other company that's built into that workflow. Very complex underneath, but that focus on the product side gives us the ability to, because I'll talk about distribution. I found distribution harder at the start, but it gives us a true competitive mode as we scale. I think about the trade-off right at the start, at least us. So if you meet with an investor like a Steph, for example, they understand being profitable at the unit level. Of course, that's what they do for a living. They're going to say, okay, so this is the amount of revenue you can drive with a location, right? So if you're just looking at the SaaS revenue you can drive from a single location, SMB SaaS, you need to be marketing-led. Like that needs to be a marketing-led go-to-market to make that a profitable business. It just does. But at the start, we're not able to use some of the really large TAM marketing tactics. Like, we're not going to be able to outbid Bill.com on accounts payable keywords. Like, we're just not right out of the gate. But something really interesting is happening, right? Because we're focused in that vertical, we end up having to use more expensive channels, like outbound at the start. But what happens is, since you're so focused in that vertical, long tail strategies like search engine optimization and these types of where you're just creating content, you really start to see velocity increase. So, I think for us, that's my experience. I think it was slightly more difficult at the start on the distribution side, but long term, we'll have good, healthy, organic inbound coming in, and we'll have a really nice moat from a product perspective.
Interesting. Like, speaking of mode and investments and so forth, like if we pull up to 50,000 feet, and maybe Steph, I'll start with you. Like if you take your crystal ball and you say, like, here are the areas, here are the segments, here are the industries where we see an outsized opportunity for vertical fintech. Like, could you share a little bit from your seat in terms of how you're thinking about the space and where you see kind of the biggest opportunity areas?
Yeah, the biggest challenge is that the biggest verticals are already taken and the most obvious low-hanging fruit is gone. So now we're like going from e-commerce to like HVAC operators, but like let's go up 10,000 feet. It's like how do we look at the spaces and verticals when we're evaluating new verticals for this stuff? One, how big is the space? So realistically, you want a space that's going to have at least $10 billion of revenue flowing through it. Honestly, realistically, it should be more like $20 billion. How do we get that number? people are not going to pay 10% of their EBITDA into software. That just does, or their revenue into software. It just doesn't make sense. So realistically, you're going to capture 1-2% of revenue. If you don't have a $20 billion space, it's probably not going to be that venture investable. So that's one. You look then at how fast the space is growing so you don't miss the e-commerces of 20 years ago. Second, you want to look for some kind of market that has many different players that you can reach. If you have a software company that only has a chance of like loan servicers, like selling into 25 or 100 companies in the world, that's probably not a great place as a venture funded business for you to start. It's probably going to be pretty difficult for you to unseat an incumbent. So you want to look for like a fairly fragmented market that has like thousands, if not hundreds of thousands, if not millions of shots at goal at trying to actually sell software. The third thing that we look for is there, like, what's the competition in the market and what are the incumbents actually doing? Can you actually solve a problem and a pain point that somebody actually cares about enough to change their entire workflow? So it's got to be, and this is like the trope, is it's got to be 10x better, but I actually really do think it has to be 10x better. Otherwise, no one is going to care. Everyone has other things to do. And so if you want to be deeply embedded in the workflow of whomever you're serving, you have to solve a problem. And so once you add all those three things up, there's not that many interesting verticals left anymore. And so we've spent a ton of time in the last few years looking at some big sectors like construction, like freight, like logistics, for instance. Healthcare is another big one, all of which have those characteristics, but some challenges. I would say a lot of them are like competed markets today that have decent incumbents already at play, probably in the 20-year, 10-year mark. But I also think another one of my theses is you could probably rebuild the same company every 10 years with new technology and make a decent go at it. So I do think there are still opportunities specifically in those spaces.
Perfect. Thanks, Stephen. Like JD, Lightspeed's had a lot of success as well in terms of choosing specific verticals. When can we expect Lightspeed HVAC to come out?
Not necessarily that soon, although, you know, if you think about the core mission of Lightspeed, we're focused on merchants on Main Street, and we want to help them thrive, and we want to help them succeed. So, you know, what you can expect is we'll continue to scale our business in retail and hospitality and open new regions, new markets. I think it's a natural evolution for us in the future to start to get into services. So if you think of health, fitness, wellness, beauty, that's maybe missing a link as far as completing the circle of merchants on Main Street. But beyond that now, what our product roadmap is looking at is thinking about the entire value chain. So upstream, you have to think about suppliers, and Jordan touched on that on the hospitality side. On the retail side, that would be brands. You know, ultimately, our retailers care about what they're assorting in their stores, and so really solving the relationship between brands, suppliers, and retailers. And so there's a lot that we're doing there, and there's a lot of financial innovation that we can do there. And then on the other side, on the other, you know, front of that spectrum of our ecosystem is the end consumer. So if you think about hospitality in cities like Montreal, Berlin, London, we're starting to have critical mass. You know, the odds are if you go out to a restaurant tonight, you know, it's likely a Lightspeed restaurant. And so there's a lot that we can start to do on the consumer side around consumer loyalty, really making sure that we don't put ourselves in front of our customers, of course, but empowering them and giving them more tools and more leverage. So that's sort of how we're thinking about the evolution of Lightspeed in the future.
Perfect. Thanks. Now, Jordan, you made it, and Jordan, Kathryn, you guys both made comments. Working with traditional financial institutions can be a challenge. There's a few traditional financial institutions. I'm with one myself. Any kind of words of advice in terms of how traditional financial institutions can better collaborate and better support fintechs to better enable them and make them and support them in their success?
Yeah, and when I saw this question that was going to come to me, I was like, okay, that's a tough one to prep for, only because I think at my size and scale, we don't even really consider it an option, to be frank, right? I think when we raise equity, we do include the major financial institutions after we've raised equity. You know, I think Silicon Valley Bank is a tough loss for us Canadian entrepreneurs. You know, I know National Bank's picked up that portfolio, and so we're hopeful that's going to, but certainly that was, you could count on, you know, some debt against equity. That was a very important partner for us in Canada. It's very difficult just based on the timing. I mean, that's my feedback is just based on the timelines at which the bank operate, right? We've met with a banking as a service provider. What would it be like for them to be able to help try to set us up a debt facility through a traditional, well, that'll be 9 months, right? Well, our timelines are days and weeks. I'm thinking about my next board meeting with Portage, like to be frank, right? Which is, you know, 50 days out. So, you know, it's just to be frank, like it's really not even a consideration for me that we would try to, you know, that we would try, like on our journey of embedded finance. Obviously, there's a couple of horizontal players that immediately have the types of financial products that we need, the ability to, you know, ledgering product, and ability to, you know, manage payouts, pull money from thousands of credit cards and manage those payouts. So I don't know the answer. I think, you know, I have a competitive payment processor, the one we're using now, that has tracked us since we did our seed. Constantly, every 3 months. We love, like, come speak on embedded finance in our office in Toronto. Like, we love what you're doing. We love B2B supply chain. So it's just, I think it's really, really difficult for banks to compete now that the fintech enablers, sort of banking service, point solutions, all these different, and Steph will figure out which ones will end up being the winners. I don't know. That's not my job, but it's really difficult for banks to compete.
Kathryn, you're obviously with Keep now, early stage. You've also had a successful exit with American Express in your past life with Cabbage. Like, your reactions, your experience working with financial institutions, what could financial institutions do better in terms of their engagement with the community?
We started Cabbage in 2008, and Cabbage would never have existed if the banks could move quickly. That's really the only reason we were successful in the first place. And sometime in 2016, a bunch of bank CEOs woke up and they were like, ooh, we're going to do fintech. And so we started getting calls from ING and Scotiabank and Santander, and we had all these partnerships. And we lost sight of something, which was the reason that our customers really loved to work with us was because of the experience that they had. And so when you embed your product somewhere else and you rely on that third party to do marketing for you, to make credit risk decisions, to run that user experience, we had the same situation with Alibaba and Airbnb and lots of other partnerships. There weren't financial institutions. Nobody in the risk department at any of these banks was going to make any more money by doing more with us. They didn't have the right incentive structures in place. And then I got to see that from the inside at American Express after they acquired us. And it was the same exact challenge. These partnerships weren't successful because the incentives weren't aligned. And so if you really want to do something meaningful, if you're in an institution, a financial institution in particular, and you want to do something exciting and meaningful, you have to make sure that everyone in the organization has the same incentives to make it work, and that you don't stray too far from the thing that you were excited about in the first place, which is usually around the customer experience. So I would say, you know, keeping those two things in mind, it's possible to have a great partnership. We did not have any of them, I would say, at Cabbage. We did much better when we ran it ourselves.
No, it's like, and I appreciate like candid, honest dialogue. I think for financial institutions and getting that feedback out there is very important because nothing changes unless we have that candid dialogue. I know this is not the only forum to do so, but I think continued open dialogue is important because I think there's a lot of improvement that financial institutions can make. There's a third kind of actor in this that we've not talked about, which is public policy. And Steph, can you talk a little bit about how public policy and the public policy framework, and what role does that play in terms of either enabling or thwarting fintech? And what more could public policy makers or policymakers in Canada specifically do to kind of help Canada's fintech community thrive and do better than it currently is?
So in Canada, we've been really involved with what used to be the Paytechs Association, which is now rebranded into FinTech Canada. And a number of our portfolio companies are part of the alliance around lobbying specifically for fintechs and innovation, because quite frankly, not to beat the dead horse here, but like policy today is hampering innovation in fintech, period. We do not have access, fintechs do not have access to the payment rails. It makes it extremely difficult to create new kinds of products when you don't have access to like basic infrastructure. If you look at what Pix and what they've done with the real-time rail in Brazil, it's nothing short of amazing, very different kind of country, but anybody basically can have access to real-time rails and get paid right away. We have nothing like that. So the fundamental infrastructure is totally out of date here. And also the access to it is basically blocked. And so I think there's a lot more that we can be doing from the policy level as well, and investing in infrastructure to really enable proper innovation in this sector, which is years behind the rest of the world.
And JD, you've got a position of privilege in the sense that you're here in North America, you're in Europe, you're around the world. How do you think of it in terms of across the Lightspeed's footprint, your engagement with policymakers, regulators, and how has that enabled or kind of created challenges for Lightspeed and its growth journey?
Yeah, I think Steph nailed it as far as the answer. I mean, the reality is what you see in Canada is common across the world. Each country is a different twist. It's very complex to navigate at times. And unfortunately, in the end, it's innovation that suffers. It's businesses on Main Street for us that suffer, that are not able to leverage the innovation that's out there, right? So just constantly having dialogues and fostering those conversations to put that front and center and understand that at the end of the day, it can be a win-win for everyone. That's a constant struggle, but it's improving. It's getting better by the day for sure.
Perfect. I want to leave a bit of time for questions, but I want to ask one last question for the four of you. We've got a lot of investors in the room, VCs in the room. Future trends in fintech space, emerging trends, where we think the market's going. Like if everyone could kind of just look out to the next 5 years and kind of make some bets as to where you think the market's headed. Maybe I'll start with Kathryn and we'll work our way across the row and we'll end off with Steph.
We have this idea that there are these fintechs that are really dominating some of the spaces, Stripe, Adyen, Wise, whatever they are. And we think they're all upstarts, but these are big established companies that are moving very slowly. And so what I think is going to happen is we are going to see redisruption of the space that's already happened. I think especially in payments, and in some other areas too, around consumer finance in particular, I think you're going to see people challenging the challengers.
Jordan.
Yeah, I mean, I think for us, and I'll just, how that relates to the macro, right? You've got these, as we look at our embedded payments journey, we look at, okay, what do the point solutions look like for embedded lending? And I think it's not completely there yet where what I would want as the CEO, and I think our investors would want is, let's not take the balance sheet risk, right? Let's use a point solution that's going to offer embedded lending. Let's lend off their balance sheet. They've got the ability to underwrite it against your data, and like literally you're live in days, right? And so that's not completely there yet, although it's sprouting up and those companies. When that happens, I think my market is a perfect example. This is kind of a sleepy market that no one was really thinking of. And when you first meet me, if you're an investor, you're like, okay, so you charge restaurants $1.99 per month. And you're outbound. You're using an outbound channel. Well, a certain percentage of them attach, right? They attach to my credit card payments, or they're pushing EFTs. And then a portion of the wholesale distributors that they bring on to our product also convert to our collector product. And 100% of them attach to payments, right? And so I think markets that looked too small to build big businesses, Steph understands this part really, really well, but at least for me, I think our market's an excellent example, and you should see more of those of like, okay, you're building for wholesale food service. Yes, it's going to be a really, really big market when we can embed financial services.
JD?
Yeah, to build on what Jordan said, I think there are companies out there that are at a unique intersection to really power smart lending. That's a theme for us that we're really interested in. We launched our capital product about 18 months ago, 90% margin, 30 million in revenue, I think, is what we'll generate this year, and we're just getting started. And so, at this stage, it's starting to think about how do we leverage, larger banks in order to continue to grow this. Currently, we're funding all of this capital via our balance sheets. There's a limit to that. But we're in a unique position where we, due to data, due to what we're seeing with our customers, we know in real time who's thriving, who's doing well, who is in a great position to receive that lending and reimburse it in an efficient way. And so I think that's a really interesting theme for us, and we're going to really expand on that. And then on the supplier side, now that we're integrating suppliers into our ecosystem, there's a lot of companies that are starting to think about that. And so how do you foster trade financing between SMBs, retailers, restaurants, and the supplier? And there too, there's a lot of disruption. That is an industry that is extremely archaic. It's very manual. It's very paper-based still to this day. There's an incredible opportunity there too that we're interested in, but lots of companies are tackling that space as well.
Very interesting. Steph, take us home.
I think we're going to further see consolidation. That's really the thematic that I'm looking at across customer relationships and software that really owns specific verticals. And as Jordan pointed out earlier, the APIs to date on the horizontal fintech side have been honestly pretty bad. And we're still at the very beginning. Even if you want to integrate lending and or any kind of solution, payments, et cetera, maybe with the exception of payments, which is now, that's probably the highest level of maturity. But if you think about lending, banking, et cetera, all of the other services, insurance even, are really still nascent as a service. So they weren't built to be embedded. Many of these are pivots that were built to service customers directly. Now they're kind of like, well, getting customers is really hard, so let's embed into other people who actually have the customers and who have scale. They weren't built for that. And I think we're just at the precipice of being able to find seamless API solutions that can actually pull the right data, make onboarding seamless, service their channel customers well. And so I think the next decade is really going to be about that. Today, if you're trying to integrate these things, there's a lot of integration work, and there's a lot of work building around it. You often still need to maintain your own payments teams to build fraud solutions and other things. There's nothing that's really right out of the box today. So that's definitely one trend that we're spending a lot of time on is this bifurcation and consolidation. And then the second thing that I would say is it's not a panel if I don't mention AI. So the 10-year, 20-year horizon, AI, I think counter to what I was saying earlier, may actually make it possible to service some of the super long tail stuff of hardwood floor operators, workflow management tools, but I'm not sure that those are going to be venture investable ideas or businesses. But I do think you can now build a pretty, what it does is it makes building software more efficient. So now you can, individual engineer sitting in this room, build a point solution that is very sticky, that's a great lifestyle business for you. So I do think we're gonna see very long tail niches actually be interesting for businesses, and because you can build those businesses with very few resources. And that's gonna be enabled by the next generation of AI. Whether or not those businesses are venture scale businesses, that is a completely different question.
Super insightful. And we almost made it without a mention of generative AI or ChatGPT. Almost. So we've got a few minutes left, and let me open up the floor for any questions. And we've got time for probably 3-4 questions from the audience.
Early in the morning, lots of shy.
Yeah, not all at once.
Not all at once. All right. Oh, the gentleman at the back.
JP, you were here last year. You talked about inventory management for retailers and knowing, in a bike shop, what inventory was going to be left over or what clothes were good for North America in one season but good for Australia in the next.
Yes.
Have you made any progress in that domain?
Great question. You met my boss and CEO, JP. I'm JD, just as a side note. We like to make it extra confusing at Lightspeed. To answer the question, though, we have made a lot of progress. So I think if you were there, or just to recall what JP shared, we acquired a company called New Order about 18 months ago. What New Order does is they provide a wholesale platform for brands like Canada Goose, Asterix, Brunello Cucinelli, to really power their wholesale business. That's an industry, for those of you that are familiar with it, that is still very old school, very archaic. You typically walk into a trade show. You typically use what they call a line sheet in order to place your order. You will sort of like feel the material and complete your order. So our goal is to integrate the New Order product within our point of sale solution. And so that a merchant on the retail side walking into their store, you gave the example of a bike store, straight from the point of sale can order from their brands that they love, like Giant in bike is a customer of ours, or Specialized, and really handle the full experience from ordering to fulfilling, uploading the inventory into the point of sale. So this is a product that is still in beta. I mean, those 2 point solutions on a standalone basis have scale, obviously, tens of thousands of customers. We're still in beta looking at how do we really improve the experience of ordering from the supplier all the way through to the retailer. But the results are phenomenal. And this is really the tip of the iceberg, because once you start to leverage that connection, then on one side, from a go-to-market perspective, it will really accelerate, our brand awareness. It'll really accelerate our reach. But then specific to FinTech, and I kind of touched on it earlier, then it puts us in a unique position, as you highlighted, to know what are the trends. You'd be surprised. A lot of these brands have literally no idea what's selling on Main Street, what's selling out there. They will wait till the end of the collection, till the end of the season, to figure out, okay, what were the hot items, what wasn't. And so we're able to provide that sell-through data in real time back to the brands, which is unique insights, so that they continue to iterate on those collections and really focus on the hot products that are out there. And for retailers or core customers, their biggest challenge is to get accepted by brands. And I quickly touched on that earlier as far as like the hot trends that we're interested in. If you're a new retailer, your biggest challenge is to get the right vertical assortment for your store. That's really what's going to drive consumers. That's really what's going to drive stickiness. But if you're a new retailer, brands don't know you. And for brands, it's a dance that they're having to do, where they want to make sure the retailers that are repping their brand out there are true to what they care about, true to their values. And there's often a financial equation there that is very hard to solve. They want to give you their products or lend you their products under certain terms. But if they have no visibility on your financial health, that's very, very challenging for them to do. And so solving that piece of the equation is a unique opportunity that we have over at Lightspeed. Long story short, to answer your question from JP to JD, yes, we've made a lot of progress on that front. We're still being very sort of conservative as far as what we think this can be for Lightspeed, but as you can hear in the tone of my voice, very excited. And there's a lot more that we'll be sharing in the coming months on that front.
Thanks. Question for Kathryn. You mentioned that a lot of the partnerships with financial institutions weren't successful because of misaligned incentives. Have any examples of incentives being correctly aligned and how that can be successful? What are some of the things that we can try that might work?
I did see it work well at American Express after our acquisition. I'm very proud of the integration effort that happened, and that within 2 years, not only were our products integrated, but our way of working was integrated. This idea of having software engineers and product people talking to each other all the time, that was foreign. They had these intermediaries, and they're changing that up because they're seeing it work faster and better and more efficiently when there's this direct relationship between those two. And I think what you need to see is you need to see it in action. You need to see that things work better and faster when people are closer and it's a smaller team. And I don't know how you do that from the outside. I think that's very challenging if you're a fintech and you're trying to work with an institution from the outside, unless you use other people's war stories like mine and you say to the CEO of Scotiabank, hey man, the only way this is ever going to work is if you make sure that your people in risk are going to make more money if this works well. That's the only way you're going to do it. So I think having those conversations directly and upfront, banks know they're slow. I mean, they know that they take a long time to make decisions. They know that people are very risk averse, and they need to be because they're highly regulated. So just talk about it. I think that's the biggest thing. We pretend like we don't want to discuss it. It's a secret, but it's not.
Any other questions from the audience? Oh, perfect, at the back. Microphone should be coming your way.
Thank you. So a question for Steph. You talk quite a bit about being embedded in terms of getting the solution through niche. I was wondering, do you have any general examples of ways to get more embedded, let's say, with the customer service side?
So do you mean like from the point of the vertical solution that's being... So because like I think there's two ways to think about it. There's the way to be, the vertical solutions are actually embedded with their customers, quote unquote, which is different than being a horizontal fintech solution that embeds within a vertical solution and services those customers. And I think the question might be, how do you be more sticky to your customers as a vertical solution? Is that right? Like, I think for me, it's all about, are you solving a very specific pain point for your customer? I think customer service is like one specific element of that, of being really sticky, making sure that if customers have problems, that they have somebody to call. I actually have a lot of portfolio companies that think very deeply about this, which is at the very beginning, one of the ways to win against competition is, in fact, having a phone having an email address or a phone number for somebody to call if a small business can't figure out how to set up their POS or whatever it is. And if you are a large incumbent, you don't have the technology and or the manpower or the scale. Like you have too much scale to service every customer in that way. So often I have found, and my portfolio companies have found, that one of the ways to take advantage of being very small is to offer really top-notch customer service, because then you can really walk your customers through the life cycle of like onboarding, which is always the hardest part, which is switching out whatever old solution they had into whatever new solution they have, because inertia is basically the hardest part of getting anybody to switch to anything. And that always usually happens at the beginning. So I do think there is a strong element of customer service orientation that allows for a startup to win. And again, that definitely does not scale. So like white glove service at the very beginning is often necessary to get to your first, 100,000 customers, but it doesn't work from there. You really need to build real processes. But that's definitely one thing that we think a lot about. And then on the horizontal embedded side, I think a lot about like what actually makes sense in this moment of time. Does it make sense to sell insurance to this kind of customer at this moment in time? And I think that's sometimes lost because as an embedded service, you kind of want distribution anywhere, but you really have to think like, what does this end customer want? Because you're going to be distribution partner priority number 89 if you're not in the top 5 things that their end customer and therefore that company actually thinks about. And so like I always encourage my horizontal solutions that are looking to embed with different channel partners to really put themselves in the end customer's shoes of like, what value is this going to drive for them? Because if it's not going to drive that much value, no one's going to care.
Probably have time for maybe 1 or 2 more questions. Going once, going twice. Oh,
We have a bidder.
hidden.
That worked.
Yes, it did. Yeah.
Wow.
Hi, thanks. I've got a follow-up question on that. So as you've got these niches that are going to get smaller and smaller, I assume they're going to get more and more capital intensive for reducing revenue. Is there a certain point where we're going to see convergence to a sort of generalized or commoditized vertical integration that you would try to sell to many industries as opposed to doing white glove to this industry, white glove to that industry, white glove to another? I see that could be difficult to scale over time.
I actually think it's going to be less expensive to service different niches with new technologies personally, so I don't really see that as being as much of an issue. I do think there's probably a private equity roll-up play to consolidate different kinds of things, but I think there's a lot of these verticals that are, it's always better to be personalized and specific, and technology now allows that, so I personally don't really see a roll-up back to a commodity consolidation play where you have one size fits all. I think technology is moving actually in the exact opposite direction of like really niche, really hyper-personalized, hyper-contextual.
Any final questions? Perfect. Well, with that being said, I'd like to thank my panelists for a fabulous discussion. It was really, really fascinating to hear kind of the stories that each of your companies are on, hearing a little bit of perspective from Steph from Portage's seat in terms of investment. Just tremendous amount of opportunity in the vertical space. Merci à tous pour ce matin. C'était vraiment une discussion très intéressante. Looking forward to the rest of today and the rest of the sessions. And thanks again to my panelists. Thanks again to FinTech Forum Canada.
Merci beaucoup. Thank you.